Happy Monday, folks. It's Monday morning. It's April, what is it? April 8th, I believe. Yep. And I seem to be hit with the allergies, so excuse me if my voice is not totally okay. I just wanted to recap some of our trades, and I think some new subscribers also are on board now. So the Baidu, the first one is Baidu. Baidu, we put this as a bull call first at 95 and 100. But right after we put it off, Baidu started going the other way. And so we had a profit of 2200 on our short call at the 100 strike price. So we closed that and we opened this 92.5 short call. So right now you can see that has a profit of 1600 and we've already booked 2200. So that's 3800. But we have yet to recover a little bit more of our losses on the 95 short call. So that's where we stand on the Baidu. Google's looking bad. It started out about 3 points down, but now it's gone down to 8.66. So let's see what our options are here because it's at 774. Now this is our butterfly right here, these three. And so that's good because the short strike is at 770, and if Google approaches that short strike, that is the best possible scenario for the butterfly. But I also want to do another adjustment. You can see that we, on the call side, our call spread is at 850, 860, and we have only 11 days to expiry. So, we've got a profit of about 2300 on that. And 850 seems far, far away right now with 11 days to go and with Google showing such a bearish bias. So what we want to do is close this bear call, book our $2,300 in profit, and I want to bring the bear call more inside. So say around the 830 strike price. So typically what we would do is come here, and then this is where we have our bear call at 850 and yeah, right here. So basically what we would do is close out that and then open a new bear call at 830, 840. So let's sell this vertical and that puts 835. So I'm going to put 840. So 830, 840, you can see we're going to get a credit of 1.35. And if you look at what the current scenario is on this, let me see, what do we have here? So 2.12 minus 1.4, so that's about 80 cents, and 80 cents and will be that's about 70 cents actually. So by getting 1.35, we are actually going to double the credit there. So that's what I'm going to do on Google, and then let's see if it comes into the butterfly zone. That would be perfect because we know that the butterfly. So so you'll have to execute this as two different spreads. I think it would be too complex to roll it into one. So you would sell these two. So you would sell the 840 and the 850, 860. And then what you would do is, first you would buy that back, and then you would open a new spread here. And I have 20 contracts. Depending on how many of our contracts you guys have, you can make that adjustment. So that's what I'm going to do on this. I'm going to close the 850, 860. We would have a profit. So I'd need to do from here. I'm going to close this. And we'll be paying 70 cents to get to buy that back. And in return, we're going to double that credit to 1.35 approximately. So we'll see if we get filled on that. We did. So now we can go ahead and put in the other order. So this is at 1.35. And if I have 20 contracts, I'm going to pick up, sell. Okay. So then I'm going to pick up 2,700 now. Okay, so we won't really be increasing our margin because it's part of the iron condor. Now what we can do is let's look at our butterfly because that's where the Google is headed right now. So I'm going to turn off all of that and take this off now and turn off everything else. Just leave the butterfly on. So okay, so Google is right here at 774, and you can see that it's entering the butterfly zone, and the butterfly has 4 days to expiry. So that's expiring this Friday. Let's make sure. Yeah, that has 4 days to expiry. And so in the next 4 days, we have room until 765. So Google has taken a bearish tone. And if it comes into this butterfly zone today, tomorrow, or the day after, you're going to see this white line stick into this triangle here. And if we can pick up about $2,000 or $3,000 on the butterfly, then we would want to close out the bull put as well as the butterfly, because that's the bull put's the one that's hurting. So, and we don't want to get if it's into the safe zone, then we want to take it off at that point. So we'll figure that out. Right now, I've moved the short strikes in of the iron condor, and that's good to go for now. So now we have our 830, 840. That's our bear call spread on the iron condor. Now, LinkedIn's looking good. Today, it's, I think, it's a little bit down. So our bull call may be losing a little bit, but we still captured this $800. That's the whole point. We had an $800 profit, and we wanted to protect that profit. So that's what we've done. I'm going to leave that alone. And then Netflix is also bearish. Short put is at 150. So I'm going to be watching this. Let's see how this goes. I'm also watching a couple of other trades that we can open today. We'll see if something shows up for today, or we can do it tomorrow. All right, guys. Thanks a lot. Hope you have a good week.